Have you ever wondered why there's so much buzz around Bitcoin halving and its potential for profit? In the world of finance and investments, Bitcoin and cryptocurrencies have become the new frontier. These digital assets led by Bitcoin have captivated the interest of people worldwide, sparking conversations about the future of money and wealth. Now let's delve into a unique feature of the Bitcoin network that has everyone talking, the Bitcoin halving. This event, which occurs approximately every 4 years, reduces the reward for mining new blocks by half. It's like a digital gold rush, creating a sense of scarcity and potentially driving up the value of Bitcoin. Why does this matter, you might ask? Well, each halving event has historically led to a significant increase in the price of Bitcoin, providing a golden opportunity for savvy investors to cash in on. So buckle up as we embark on this journey to explore the gold mine that could be Bitcoin halving. Understanding Bitcoin halving could be your key to unlock unprecedented profits. So what exactly is this Bitcoin halving everyone is talking about? Let's break it down, shall we? Imagine a gold mine, but rather than being filled with gold, it's filled with Bitcoin. Now miners, those tech-savvy folks with powerful computers, work day and night, solving complex mathematical problems to extract these Bitcoins, much like miners chipping away at rocks to find gold. For their efforts, these miners are rewarded with Bitcoins. This is how new Bitcoins are introduced into the system. But here's the catch. Every 4 years or so, or after 210,000 blocks of Bitcoins have been mined, the Bitcoin network undergoes an event called halving. As the name suggests, the rewards that miners receive for their efforts are slashed by half. This is the Bitcoin halving that's causing quite a stir. You might be asking, why does this happen? Well, this halving mechanism is baked right into Bitcoin's code by its mysterious creator, Satoshi Nakamoto. It's a way to control the supply of Bitcoin and prevent inflation. Unlike traditional currencies where central banks can print more money when needed, there will only ever be 21 million Bitcoins, that's it. Now at the start, miners were rewarded with 50 Bitcoins for each block they mined. After the first halving in 2012, the reward was cut to 25. Then in 2016, it was reduced to 12.5, and in 2020 it was down to 6.25 Bitcoins. So, as you can see, the amount of new Bitcoins entering the system is steadily decreasing. And what does this mean for the value of Bitcoin? It's simple economics, really. When something is scarce, its value tends to go up, and Bitcoin is no exception. With fewer new Bitcoins being created, demand could potentially outstrip supply, and when that happens, prices could skyrocket. Bitcoin halving, in essence, is a pre-programmed scarcity, and scarcity often leads to value appreciation. So keep your eyes peeled for the next Bitcoin halving. It might just be an opportunity you don't want to miss. Now that we understand what Bitcoin halving is, let's delve into its profit potential. Picture this, you're at a marketplace and there's a high demand for a particular good, but the supply of this good is cut in half. What happens? The price skyrockets. This is the fundamental principle of supply and demand that Bitcoin halving taps into. To better comprehend this, let's take a journey back in time to previous Bitcoin halvings. The first Bitcoin halving took place in November 2012. Prior to this event, one Bitcoin was worth around $12. Fast forward to a year later, and the price had soared to over $1,000. That's an increase of over 8,300%. Then came the second halving in July 2016. Bitcoin was worth around $650 before the halving. A year and a half later, the price had rocketed to nearly $20,000 in December 2017. That's an increase of more than 3,000%. Most recently, in May 2020, the third halving took place. Bitcoin was valued at around $8,500. Fast forward to the peak in April 2021, and the price had shot up to almost $65,000. That's an increase of over 700%. Now, it's important to note that these price increases weren't solely due to the halving events. Other factors like market sentiment, institutional adoption, and global economic factors also played significant roles. However, one can't ignore the pattern here. Historically, halvings have been followed by significant bull runs. The reduced supply, coupled with the increasing demand for Bitcoin, creates a pressure cooker situation that could potentially drive the price up. It's like a ticking time bomb, waiting to explode. And when it does, those who have invested in Bitcoin could potentially reap significant profits. Historically, Bitcoin halving has signaled the start of a bull run. The big question now is, how can one profit from Bitcoin halving? Well, there are a couple of strategies to consider. The first one is the long-term holding, often referred to as hodling in the crypto space. The idea here is straightforward. You purchase Bitcoin before the halving and hold onto it for a prolonged period, expecting its value to increase over time. Historical trends suggest that Bitcoin's price tends to rise after a halving. However, it's essential to remember that past performance is not a guarantee of future results. Another strategy is strategic trading. This approach involves buying and selling Bitcoin at specific times based on market trends and price movements. For instance, you might buy Bitcoin in the lead up to a halving, anticipating a price increase, and then sell after the event once the price has risen. This strategy requires a deep understanding of market dynamics and a nose for timing. But, and this is a big but, both of these strategies come with risks. The world of cryptocurrencies is notoriously volatile. Prices can skyrocket one moment and plummet the next. Therefore, it's paramount to only invest what you can afford to lose. Doing your due diligence is a must. Research the market, understand the factors that affect Bitcoin's price, and keep an eye on global economic trends. Moreover, it's crucial to remember that Bitcoin halving isn't a guaranteed ticket to wealth. It's a complex event that can affect the Bitcoin market in unpredictable ways. So don't put all your eggs in one basket. Diversification is key in any investment strategy, and it's no different with Bitcoin. Lastly, remember that investing in Bitcoin isn't a get-rich-quick scheme. It requires strategic planning, a keen eye on the market, and above all, patience. The most successful investors are those who are patient, those who understand that wealth creation is a marathon, not a sprint. Investment in Bitcoin requires strategic planning, a keen eye on the market, and above all, patience. With the next Bitcoin halving expected in 2024, what could be in store for investors? As we inch closer to the anticipated Bitcoin halving of 2024, the air is thick with speculation and predictions. While it's impossible to predict the future with absolute certainty, historical trends and market analysis can offer us some intriguing insights. In the world of Bitcoin, halving events are significant milestones, often associated with shifts in price and market dynamics. Bitcoin halvings occur approximately every 4 years and represent a 50% reduction in the rate at which new Bitcoins are created. This event, rooted in the very code of Bitcoin itself, is a stark reminder of its digital scarcity, a feature that sets it apart from traditional fiat currencies. So, what can we expect from the 2024 halving? First, it's important to remember that the market is influenced by a multitude of factors. And while halving is a major event, it's not the only one. Historically, halvings have been preceded by a surge in Bitcoin's price, followed by a period of correction. This can be attributed to the supply-demand dynamics. As the rate of new Bitcoin creation slows down, assuming the demand remains constant or increases, this could potentially drive the price upwards. However, it's also important to consider the broader crypto landscape. With the growth of other cryptocurrencies and the increasing institutional adoption of blockchain technology, the market context of the 2024 halving could be quite different from previous events. So, what's the takeaway here? Stay informed. Keep a close watch on market trends, not just in Bitcoin, but in the broader crypto and financial landscape. Making educated decisions is key in navigating the dynamic and often unpredictable world of Bitcoin investing. As we approach the next Bitcoin halving, one thing is certain: exciting times lie ahead for Bitcoin enthusiasts and investors. In conclusion, Bitcoin halving is a phenomenon worth understanding for anyone interested in cryptocurrencies. We've taken a deep dive into the concept, breaking it down into digestible pieces. It's a process that happens approximately every 4 years, effectively halving the reward for mining new blocks on the Bitcoin network. We've also explored the profit potential that arises from this event. As history has shown, the scarcity created by halving can lead to increased value, presenting savvy investors with an opportunity to profit. However, as with all investments, there's a learning curve. We've discussed some strategies on how to profit from Bitcoin halving, but it's crucial to continue your education. Keep an eye on the upcoming Bitcoin halving in 2024 and stay updated on the trends and news in the cryptocurrency world. Knowledge is power, and in the world of Bitcoin, it could also be profit. Stay informed, stay ahead.